What's going on, family? What's going on? Hopefully everybody's having a blessed day. Thank you for taking the time to watch out of this video. Today, I'm going to be going over the Ethereum sale that happened yesterday. It was a very nice sale. It was around the price that I was looking around was around 1780. Taking it from this entry around this area with the stop loss above this high and taking it down to around the 650 area, 1650 area, excuse me. But I'm gonna go over the whole setup. First, I'm gonna go over exactly what I have mapped out, and then I'm gonna go back and break it down for you guys so you can see exactly what I was looking at. But over here, what I want you to pay attention to is the 4-hour time frame is the time frame I'm currently looking at. And as you can see, I have a whole bunch of Fibonacci's on, but like I said, I'm gonna break it down. But particularly, I want you to pay attention to this candle right here. This candle on the 4-hour time frame is the significant candle that carried on the downtrend from that move. But if you were to zoom out, right, if you see I have this wave sequence here, this 1 to 5 wave sequence, and what this sequence is really analyzing is the impulse of this first sell-off with the retracement and then another attempt to continue the sell, but the buyers were holding this zone right around the 618 Fibonacci sequence that I have. Price came back up as if it was going to continue the bullish trend. And if you were able to utilize, you could have maybe bought this up for a little bit. But what I want you to pay attention to is exactly right here. Price failed to close above this previous high right here. This area right here, price came up with this candle, right? Price closed above and then immediately rejected back down. So it's really important to pay attention when you have your wave sequences that you're counting, right? If you would count 1, 2, 3, right? After the third leg is really when you want to look for entries around the 4th and 5th wave sequences. But like I said, after we've had this low and it made this 4th sequence, the sellers did not continue the momentum. So the buyers picked back up. We are now back above the 50 moving average, which is this white line that I have going across horizontally. Price continued back up, but it failed to break above and continue above the third leg. So you have a double bottom now over the 2nd and 4th sequence and a double top, 3rd and 5th sequence. And now that you have a double bottom and double top, these are what these blue and red zones that I have. So now initially, until price breaks out of one of these zones, you are kind of not really, but considerably in a consolidation. But what really gets interesting,
it's 14 hours.
What really gets interesting is when price comes back down beneath the 50 moving average. You can see the sellers pick up a lot more momentum, especially these 3-4 hour candles. Price came back and retested, right? If you pay attention to this fib, retested around this 50% mark and then continued down into the extension zones is where the real sell really took place. But really what I want you guys to pay attention to is this fib that I have from the 236 zone on the yellow fib and the red fib that's marked up there around similarly around the same spot. The zone that I'm looking at particularly is around the 1780 level. That 1780 level really said a lot for what price was really trying to do for the sellers. I'm gonna make this red to idolize that I'm looking at it from a seller's perspective. And it really, really starts to identify itself as you go down to the lower time frames, right? As you break down to the lower time frames, you can see that price once again, once it broke this 1780 level or the 236 fib, however you want to pay attention to it, as it broke this level multiple of times, right? After it finally gave you a full open and close, which is what this white symbol utilized pointing at this candle means, it finally gave you this nice big bearish impulse of continuation. So it was very nice if you were able to utilize and pay attention to see what you're looking at. If you were one of the buyers that were really trying to take this up, right, it gave you a nice bullish impulse of moves to continue to buy. But when it comes to the average of price, right, the 50 moving average really gives you a visual aspect as to where buyers could not continue. This candle right here is the main candle that I'm really paying attention to. This blue bullish candle that opened and closed above the 50 moving average really set the place and the tone for me realizing like, all right, the buyers are not able to continue at this time. So I should be looking for more sales, especially when you have this candle that opened and closed beneath here and really just tank down to the downside. And when it comes to my targets, I like to look for the extension zone. So I like to look for the 13 extension, 272 extension, and then the 618 as well. So those are many different fibs, and that's just the overall analysis on how I really looked at and took a part of the sale. But I'm gonna really break it down so you guys can really see exactly how I look at and go back to market. So the main thing I always like to do is go from a higher time frame and really pay attention to how price is utilizing and moving along with the 50 moving average. So if you see we have this nice right continuation up, and then you have a nice retracement back down, and then a nice impulsive move back up. This impulsive move, bullish move back up, the second wave did not, obviously you can tell, break the high. So I like to utilize that to pay attention to how price reacts. So this is where I like to use my Fibonacci sequences to really just tell me what is going on in the market, so I can really pay attention and adapt to it, because we never want to marry a trade. We want to adapt and be flowing into what price is telling us. So what I see right here is price came back up right into this 786 zone, and when it came back up here, it had a lot of indecision, especially from the daily time frame. So I like to still idolize and use the 50 moving average across all time frames. So now I'm gonna go down to the 4-hour time frame, and now if you pay attention to the way price is reacting to the 50 moving average, it's telling you a story, right? After you have this bearish sell-off here, the one that I really the one that I really paid attention to over here on my marked up chart. Is my computer going to freeze on me? Okay, my computer's not acting right, but that's okay. We have a difference. You really want to pay attention to the sequence on how the move works. So I'm going to go ahead and count the sequence for you guys so you can see. The one starts from the impulsive move, but you want to start from the movement into the impulse. So if you start with the actual movement into the start of the impulse and you start the count wave here, this is your 1, right? 2 with the low, and then 3. Once you have your 1, 2, 3 combo, is really able to tell you what's really going on in the market. So once this 4 mark was made, you can look and say, hey, I can take this up for a buy, which I did. Once price held this support zone up here and started making his move above the moving average, I look for entries around the 1800 price level, which is right around here. But as you can see, price failed to continue to the top side. So you can say, okay, hey, price failed to continue, but otherwise it could retest, right? Hold these suppliers and buy back up. And that's what these blue candles right here were. A lot of buyers expecting that it would hold the 618 fib and continue up, but it didn't. So this is where we have to adapt to what the market is telling us. So as I can see, these 78671 and 618 levels are beginning to hold. When price gets back over around here, as it broke down again, I can really utilize and be like, okay, now I can no longer look for buys when price failed to continue up here. So now I'm gonna drop down to the hourly time frame. The lower time frame is where I like to look for my entries and really tell me what's going on. So I told you guys previously back before when I was looking from a 4-hour perspective, but this is where the money gets real interesting, right? I'm gonna draw a fib from this high, where I'm going to start from the high. I usually use the wick, but I'm going to start from the closure of the highest candle, and I'm going to take it from this lowest candle right here, right? And this fib, I'm going to make it yellow, so we can all, be on the same page. And all what the yellow means is just simply a lower time frame fib. So when we look at the white fib, utilize that as a bigger and higher time frame, and then the yellow fib is what the lower time frame is going to be. So try and stick with me. I know it may be a lot on the screen, but I'm trying to say as much as I can, really explain what happened. Okay, so I'm gonna use the impulsive legs again, right? This is the impulsive move that I'm looking for to collect on the retracement back up. So I'm gonna start with the move going into the impulse, where I'm gonna start my 0 and I'm gonna count it from 1 to 2. Your 1 and 2 legs is really your impulsive move that you analyze and see that happen. Once you have the retracement, that's where your 3 really took place. So you have the 1, 2, 3. After I get the 1, 2, 3, I know I can be looking for entries on the 3rd and 4th, or if I miss the 3 to 4th entry leg, I can maybe, if it presents the opportunity, which in this case it does, on the 5th. So what I mean by that, once I have my 1, 2, 3, and I see that price failed to close above this bullish candle right here that opened above the 50 moving average and rejected back down around the same 1800 price level that price broke above before and gave us a nice buy, instead of it buying again for the 3rd time, it rejected. So I could have sold here based off this 50% fib. But let's say I missed that as well, right? We have the 3 to 4th wave sequence, and price retraced Thankfully for us, I'm gonna make this wave sequence red. It gave us another opportunity to enter into the market. You could have entered somewhere once again between this 50 and 38 2 fib zone. It gave you a nice opportunity to enter. I'm gonna mark this zone right here and color this red box. You could have entered anywhere in here. Right, these are from my early entry people that really know what they're looking for. But if you don't, I always tell people to look for the break of the structure. So what the break of the structure and what structure is in this case, in my scenario, would be if you were to mark the low, and I'm gonna mark this blue so you can see where the buyers are buying out. Right, the buyers were attempting to buy out of these areas, but it held the 1760 zones where I'm looking at right now. Once price closed below, which is this white candle right here, I'm going to actually even put a red arrow so you can really see which candle I'm talking about. Once price closed below, right, it broke the structure of these lows, and it's also breaking my fib levels as well. So I could really take a nice confirmed sell entry from right here, right? Put my stop loss above the high and take it down to my opinion where I like to look for my targets, my extension zones. So you have the 113, the 272, 414, and the negative 618 extension zones. I'm gonna really pay attention just for the negative 618. That's my main key level I like to look to. But if you look at the risk to reward, it's not really that good. It's less than a 1-to-1 risk to reward, and that's because you're trying to identify it from a lower time frame. But if you go to a higher time frame, and once again you really identify what it is that you're looking for, once I see from a far perspective, right? Once I see that price broke beneath my moving average right here, got 3 bearish candle closes beneath the moving average. It retraced. Once it retraced, and like I said, this 3 to 4th wave sequence is what I'm trying to pay attention to. I'm really trying to enter the market. So me personally, I don't like to enter into the market no lower than a 236 zone. Once it passes that 236 fib zone, that is for me a confirmation that the continuation of the move is at play. So me at the latest entry for me will be at this 236 zone, which is right around this 1770 area. So it gives you a much better risk to reward. Put your high right about there. That's risking 35 points for your target to be 98 points. Your risk to reward immediately went from less than a 1 to now a 2.77 risk to reward. So it was beautiful, beautiful, beautiful. And even if you aren't, familiar with how to use the higher time frames, you can still utilize the lower time frames as well. Right, looking at this from a lower time frame perspective is really where the price action really starts to get into play. So once again, if you pay attention to these 2 bullish impulsive moves where price finally made some support right here, made his wave up, this is some nice bullish price action. Price retraced back down where the bears are kind of evenly just at play right here. This is a nice bullish move up, nice bearish move up. Price right here is great for the buyers. Found support, came up, closing above the moving average, retraced, came back and closed again. This is a huge for the buyers. But what I really want you to pay attention to is the price action right in here. This price action right in here is really where price really told you the answer to the test. Okay, once price closed back above here, again, this 50 moving average, which is telling you the average of price, you can see the buyers failed to get in. And then once price came back below the 50 moving average again, you can see that this is a nice big bearish candle. Price, the bulls trying to fight. They're trying to fight. But if you can see price is making lower lows, right? Higher low, lower low, higher low, lower low, another higher low, the last higher low before price finally took off to the downside. So it's really important to not only understand price action, but market structure as well. When price broke this low, this was the final collapse beneath the low of the structure level. And then price really continued and collapsed to the downside. So this is pretty much it on my Ethereum sale that I was looking at, really around that 1780 whole level. Once again, I'm going to come back to the screen. Is going to okay, here we go. The screen is a little bit slower, right? Right around the 1780 whole level, taking it down to around the 1665. Beautiful price action, beautiful sale. I love the way that the market really presented itself. And once again, if you knew what you were looking for, the sell was there. Clear as day right here on the 4-hour time frame. I'm gonna give you one last visual aspect on exactly what I was looking for. And when price closed beneath this 236 zone right here on the lower time frames, really even on the higher time frame, if you knew what you're looking for, the sale was just immaculate. Immaculate. Beautiful, beautiful, beautiful. I love the way that price made this sale to the downside. It was really amazing. Really just, a key time to utilize your structures, your time frames, and really being able to adapt to what price is telling you, because that's all this was, really an adaptation to price moving around the whole key levels. And in my opinion, the whole key level at this prime was 1780. So once again, thank you for taking the time out of your day to watch this video. I'll be coming up with more updates and really how I'm looking at and attacking the markets. This wave sequence, one more time, was just really beautiful. If you knew what you were looking for, the wave sequence gave the way. This 5 point wave sequence just told a beautiful story on how it is that you're really able to analyze and attack the market. So once again, thank you for taking the time to watch this video. Please look forward to more videos. If you have any questions or comments or concerns, I would love for you to tell me how your feedback was if you were able to get in yourself. So thank you and enjoy your day. Peace.